welcome to this month's episode of Fintech Firebrand. I'm Virginie O'Shea, founder of Firebrand Research, and I'm here to chat to you about this month's festive fintech and finreg news. Now, it's December, so it's holiday season almost upon us, and lots of award ceremonies and final events of the year taking place. It's certainly been a busy year, and it's certainly been a busy month thus far in December. We kicked off the month with the news that the first US crypto spot trading has happened on US regulated exchanges. The CFTC announced that at the start of the month, showing that CFTC is making more progress with regards to its crypto planning. It's also launched its collateral initiative with regards to DLT settlement, DLT transactions for crypto assets used for collateral. So much more progress there. There's a lot of different industry initiatives in that space as well. So certainly one to watch going into 2026. We also got an early Christmas present from the European Commission in the fact that it published its massive package related to breaking down barriers to integrate financial markets, and that's what it's called. The big focus is on breaking down barriers across the European member states to make a more consolidated and harmonized capital market across the region. Now, that did used to be called the Capital Markets Union. Then it was rebranded to the Savings and Investments Union, so SIU. And this is all part of the SIU. So in the trading area, the focus is on allowing the consolidation of trading venues, so that those trading venues can enter multiple member states, remove some of the barriers there, simplifying the process for brokers to access those venues, particularly those from foreign markets. And they have now created a new status called PEMO, P-E-M-O, which stands for Pan-European Market Operator, for groups that operate in multiple countries under one license. So that's all about consolidation, all about harmonization. Unsurprisingly, similar regime in the post-trade space. There's a lot of focus on cross-border simplification with regards to CSD services. I know that's part of the CSD regulation, or CSDR. There's been a lot of targeted amendments there with regards to reducing the barriers for settlement operations and asset servicing operations across various member states. And there's a focus on enhancing connection amongst settlement systems. So looking at the topic of interoperability of both CCPs and CSDs. So certainly a lot for post-trade to chew on there. On the asset management side, there's a lot of focus, and there has been all year, on looking at the costs of cross-border funds, trying to improve that. We've seen lots of different consultation papers coming out from ESMA on this topic, and there's a lot of focus there in terms of harmonizing supervision in the asset management sector, making it much easier for firms to operate in multiple markets and to passport across the region with their investment funds. On the innovation topic, unsurprisingly, much like across the pond, we are seeing much of a push around DLT, distributed ledger technology, and the focus is on building out the DLT pilot regime that was launched a couple of years ago, relaxing some of the limits around the DLT pilot regime, so making it easier to launch pilots under that regime. It has been a bit lackluster thus far. There haven't been a huge number of applications. So I know that this is part of trying to bolster that, trying to focus on more innovation across the region as well. We are also seeing a lot of regulatory and supervisory developments as well. Not very easy to say in December. The one big proposal there is for ESMA to take control of overseeing crypto asset service providers. So ESMA would be the one in charge of overseeing those particular within the crypto universe, but also looking at significant market infrastructures. So financial market infrastructures would, like CSDs and CCPs, would fall under the supervision of ESMA directly. Now, this is probably going to be quite a controversial proposal. I know that a lot of national regulators will not like powers being taken away from them. This has not been vetted by the whole trialogue process thus far. It's merely a package that needs to be approved. So certainly imagine a lot of political discussions will be taking place on that topic. We'll also see ESMA having a new executive board being appointed as well as part of strengthening their oversight and their governance processes as well. So some interesting and very wide-ranging proposals within that package. Certainly gives you a lot of Christmas reading to do ahead of the December holidays. Now, we also know everyone and their dog has been talking about central bank digital currencies this year. We've had the Indian Central Bank weighing in last month, as I mentioned in the last episode. This month, we've also seen Norges Bank, or the Norwegian Central Bank, who came out and said that they do not currently recommend the introduction of a CBDC. They said that this week. They believe that the krona at the moment remains secure, efficient, and attractive. I'm quoting them directly there. And there is no call at the moment for a CBDC. Now, I guess the CBDCs that are being discussed and stablecoins that are being discussed are with a view to tokenized assets taking off. And we have not seen much of a secondary market for those assets thus far. So maybe Norges Bank is being, as usual with the Scandi banks, relatively conservative in assessing this market. So not building things before they are demanded from the market. So it'll be interesting to see whether that strategy pays off for them. Also, the Securities and Exchange Commission is now down to 3 commissioners, only 3 Republican commissioners left. So much like the CFTC, they're a bit bare bones at the moment. But now that they're back in force after Thanksgiving, they are starting to push out some rule changes. We've seen mainly it's delaying things. So they have extended the deadlines or the compliance dates for Rule 13F2 and Rule 10C1A, lovely named regulations there, but that's related to Reg Show, which is the short selling regulations. So they have now been extended. I think they've pushed them back 9 months. That gives the industry a bit more time to implement, though I think everybody was ready for the implementation because they've already been pushed back once before by the SEC. So it'll be interesting to see if that makes an impact on people's preparations. We've also seen in the UK, the FCA putting out some new rules, which I discussed on Fintech Insider this month. Related to ESG ratings providers and adding new requirements for those ratings providers related to conflicts of interest, transparency, explainability of ratings methodologies. This is overall part of the FCA and the UK's focus on sustainability rules, trying to make them easier for financial institutions to comply by adding some more pressure on the data providers out there to make sure that that data is understandable. It's not a black box. So it's certainly important to see that progress there. Elsewhere, obviously, we've seen a lot of sustainability rules stalling. We have seen the EU proposals after the leak with some changes to the funds regime. So expect 2026 to show a lot more around sustainability too. Now, my final thoughts for the month relate to the ESMA Data Day, in which I participated earlier this month, start of the month. Very interesting to see as part of the SIU planning and as part of that very large package to make EU more competitive on the global stage. We've got the Data Union Strategy, which was published last month. And ESMA has been talking a lot about data sharing. Now, it's something I spoke about with regards to my roundup of the RegTech convention, but certainly seeing so much more discussion amongst regulators about data and AI, much more than you would expect towards the end of this year. But certainly, I think it's an important topic for them. Part of the Data Union Strategy is having a central point for data to be accessible to be able to train AI models, which is interesting. Definitely, AI is very data consumptive, so it certainly needs a lot of data on which to be trained. So that'll be interesting to see a single access point for that kind of data access. We also will see a lot more focus on the simplification of reporting items, the consolidation of various regimes, as I mentioned, the EBA, the ECB, the EC, ESMA, all of the EU level regulatory bodies are talking to each other about how to make a more less burdensome regulatory framework for reporting across the region, reducing the amount of gold plating and interpretation that happens at national levels in particular, and enhancing the consistency of data for the consumption by regulators for them to put their own AI on the top of it. So certainly interesting to see a lot of work around that. Certainly, as you will know, if you have ever looked at data strategy programs in the financial institutions, as I have for the last 20 years, implementing data strategy is not easy. Often it relies on a lot of operational change, cultural change, organizational change, as well as technology change. Generally, you can't fix things with a piece of technology. Unfortunately, even if AI does manage to get to, less over a toddler stage into, a young teen or a tween stage in the next couple of years, it's still going to struggle to deal with a lack of harmonization across data sets and a lack of availability of data. So certainly making sure that data culture is embedded across the industry and the supervisory authorities themselves will be important. So really interested to see what happens with all of that. I'd love to see which provider is going to be helping these EU regulators from the vendor side to connect all the data dots across the region, because certainly it will not be easy for them to do it on their own. It'll also be interesting to see from a geopolitical angle as to what kind of provider they want to work with, because certainly I don't think they'll be wanting to hand all of their data eggs into the US basket or the Chinese basket. So definitely not that many providers out there. When it comes to AI, Mistral being the only one that is of scale at the EU level. So interested to see whether they get picked on an AI trialing front. But don't forget, we'll also see a lot more sandboxes popping up across the EU, as that's part of the EU AI Act, although that may be changed and delayed at certain points next year. But certainly we'll see more sandboxes and a lot more experimentation with AI from the regulatory community. And with that, at the end of this episode, I'd like to wish everybody a happy holiday season. I hope you all manage to get some rest and enjoyment, because we're going to have a very busy year next year.